Yo, yo, what's going on, everybody? We should be live now. Welcome back to the channel. Today, this full live stream is going to start off with me breaking down my losing trade today. A little bit different. You think, why are you breaking down a losing trade? Well, why not? I think it's very important that I show both sides of the coin when we're actually trading live, because if I just show you guys the winners I have, which is very far and few in between, then you might be under the impression that all I do is win and make money in trading, when in reality, if you guys look at my results right here, you see that 46% of my trades are losses, 19% are wins, and 34.5% are break evens. This here is the trade that I took today that ended up losing me 0.5% on my live account. And today we're actually going to go in this asset and talk about what actually led to the trade. So I always start on a higher time frame. For this one, I liked the look of the 2-month time frame. You see that it's really just been consolidating in this area here for what seems to be since, like, oh my god, since 2005 to 2024, it was stuck in this big range. And then price finally started to make big, nice, voluminous candles over this range, which indicated to me that this was actually going to be a market that could be considered strong at the moment, since it's breaking out of this consolidation that lasted like, what, 20 years, which is actually insane. So for 20 years, I wouldn't have looked at this market. If you think about it, I wouldn't be willing to even have this asset on my watch list if it's such a high time frame, like the 2-month time frame that's going down into this area here, because I know usually after a market goes through an extended period of falling, it'll usually go back and forth for a decent amount of time. It could be short term, which is time frame dependent, or long term, right? So in this case, if we're expecting sideways price action on the 2-month time frame, we can expect a fair bit of candles in here like you actually see in front of you, which is going to equate to years, decades potentially, in this scenario 2 decades. So once price on my 2-month time frame broke up against this area, I was looking to trade inside this leg here. So I then went down to my weekly time frame and I saw price making nice bullish ranges to the top side inside this higher time frame leg here. So on my weekly time frame, you'll see price made a push here, starts creating stairs upwards, and then falls, fails the moving averages, and then enters a consolidation in this area here. And at this point in time, price is still on the moving averages and has failed to create any strong push out of the consolidation area on this time frame, the 2-month in this area. Pretty much, if you look at this, we have a consolidation inside of a consolidation. So this would be the smaller consolidation, and then this would be the higher time frame, or sorry, the bigger consolidation. And then price finally, at the time it breaks out of the smaller consolidation down here, it's also breaking out of the bigger consolidation that we drew over here. So pretty much both of the consolidations get validated through at similar times. So what that looks like on the 2-month is you have a stairs upwards, and then you have stairs downwards, and usually after you have a move up and down, before the market makes that next move up, you'll go through that consolidation, which in this case was a more shorter term consolidation, like I said, inside this bigger consolidation. So once price breaks out of that consolidation area, both of them. I drop down to my weekly time frame here, and once my weekly time frame started to push bullish, so fails the moving averages, makes pushes bullish, I became very interested in the market here, because I now know on my higher time frame, the 2-month time frame, we have broken out of this large consolidation area. We're now above the moving averages, and when you're above the moving averages on a time frame, that means price is stronger than the period the moving average is representing. So I have 2 moving averages on my screen here. The lighter one is the 10 moving average. The darker one is the 20 moving average. So when price or the candles make moves above the moving averages, it's telling me that recent price action has been greater than the last 10 or 20 candles, which is important because it shows something different is happening than areas down here, where in consolidation areas, oftentimes you'll find the candles or the structure has actually fell below the moving averages, meaning that it's actually moving at a lesser rate, or it's actually a lower average price currently in the present moment than it was over the last 10-20 candles. So that's pretty much how you could read moving averages. A good rule for moving averages is when it's above the moving averages, you're bullish. When it's prices below the moving averages, you're bearish. So given that information, you can assume right here we're bullish. Now, once price breaks down on my weekly time frame and breaks out of this consolidation period, so it creates like a roof here. You see it got rejected a couple times, and then it finally breaks through. I'm expecting to get a bullish trend out of this. And whether that comes into fruition or not, I don't know that until after the case, but that's the anticipation, right? Because we know when price breaks out of consolidations, whether it's this one on the weekly or this one on the 2-month, we expect it to continue bullish. And sometimes it'll continue bullish for a short-term period of time. Sometimes it'll kind of sustain its move longer term. You never really know, but you just trade what it tells you. And in this case, price actually does sustain this move on the weekly when it breaks out of this consolidation, which is good, because when price starts doing something different than it was previously down in these areas here, where price is under the moving averages and making big pushes down, once we get on this side of price, above this little consolidation line I drew here, you see price is not only above the moving averages, but the ranges of bullish candles are actually bigger on this side than they were over here, right? So there's more down candles on this side, more down candles on this side than there is over here, right? So you get more up candles in a row, where on this side you get more down candles in a row. And the area where there's down candles in a row are actually bigger than the areas where there's only a couple up candles. Where on the flip side over here, there's way more up candles in a row than there are down candles, meaning buyers are in control. So that's a little tidbit. So pretty much if I draw that out, whenever you're in a bearish market, the down pushes are usually bigger than the pullback areas. And then when you're in a bullish market, the bullish pushes are usually bigger than the pullbacks. So just something to keep in mind there. So when price starts pushing up on this weekly time frame, all I'm thinking right here is that, oh my goodness, price has just broken into accumulation and now it wants to go, right? So if price wants to go, or I'm assuming price wants to go on the weekly, then I'm expecting this trend to sustain itself. And I'm actually able to look in areas like this here or this here and see if my lower time frame that I go to next, which would be my daily time frame, start to align with the expectation on the weekly time frame. Because right now the weekly time frame that just broke out of this consolidation down here and starts making bullish pushes is now in alignment with what the 2-month is doing, because the 2-month has now broken out of this big consolidation and it's making a bullish push that has the expectation of continuation like that. And now the weekly is also playing out that same exact story. It's just at a different point in the story because it's actually already proved multiple bullish structures up, where on the higher time frame, since a higher time frame takes longer to play out, it's actually only created the first potential higher high up that will eventually go down to make a higher low before we anticipate the next higher high. So the weekly time frame in this area here, you'll see if I go down to the daily, it actually plays around for a little bit. So price kind of fails here, makes a push upwards, and then fails again. So I was actually considering this whole area, once price fails back down again, a new consolidation range. Whenever price fails those moving averages, I am just assuming a new consolidation range. That's the most simple way to put it. And what I know about consolidation ranges is, one, they're either going to continue moving sideways, which means it's an untradeable market, or they're actually going to continue moving down once they fail the MAs initially. And if it starts moving down, then there's simply nothing to do, because why would I trade one time frame that's bearish when my weekly and my 2-month time frame are already pushing bullish? See, when something becomes unaligned in the cycle, that's pretty much when you just want to step away because something is broken. Something's not right. So at this point in time, we were waiting. And we were waiting for something clear. And right here, you could have looked inside this area to see on a lower time frame if potential trades were there. But price actually just ends up failing, becomes choppy, and then fails, which comes back down into this consolidation range. And then eventually price makes that push up out of the consolidation range. So what we get now is a market on the daily time frame that has shown strength different from what it was previously doing to the left here, because right here on the daily time frame is much different than right here. We can all see that. It's much different. Here, the MAs are cutting through price right in the middle, where over here, price is just sitting on top of the moving averages, and it looks like it's making bullish structures upwards, and the downwards candles are very minimal. There's 1 to 2 downwards candles before bullish price starts pushing again. So those are subtle differences that are important to note when you're looking at a market that's trending versus a market that's consolidating, because that's going to help you understand when it could be ready to touch or when price is in a condition where you wouldn't touch it at all. So once that daily time frame breaks through this roof here where it tapped down off of multiple times, once it breaks through, makes a push away from the averages, right? So if I take a replay and do here, it makes a push away from the averages and then makes a pullback right on them while they're rising up. So it's important to note here, at this point in time, once the daily breaks out of this consolidation range, the moving averages actually start pointing up on the daily, meaning the average of price is increasing through the last 10 to 20 candles, which is important to note, right? Because not only do you get the validation of price making a push higher out of all this bull crap, but you now have the moving averages tell you that price is actually increasing from an average perspective as well, which is why areas like this become very interesting. So that's when we would actually start paying attention to the daily, because it's now showing potential that this market can make stairs upwards after breaking through this roof. So what do we expect to happen is, well, we expect the stairs upwards on the weekly to continue. And now that the daily is proving that it wants to make stairs up, we can expect that weekly leg to start coming into fruition, and we can maybe expect a high to come right around here. And let me remove those just so you guys can see, but we would expect a high to come somewhere around here. So let's go back to the daily. Let's play it out. You guys will see my trade's actually up here. You can kind of see the little indicator. So we know where the trade was taken. So let's just let the daily do its thing before we get to our trade. So I missed all of these areas right here where were great opportunities for trades. I missed everything inside these areas, and I'm sure there probably was trades in these areas. Let me just go check real quick. So right here it was a little bit choppy, but we can still take a look. So over here there wouldn't have been a trade for me, and potentially right here could have been a trade, but it's pretty high up. No, that wouldn't have that spot wouldn't have been a trade for me. Yeah, there's actually no trade for me here. Okay, so that's good to know, because sometimes when price is in an interesting area, you may not get an entry after all. And by just taking 10 seconds to look through this price action down here, I came to the conclusion that even if I was looking at this market at the time, I wouldn't have got an entry. And that's important to note, because a lot of times trading is sitting and waiting for something, and when everything starts to line up, oftentimes you still won't get an entry. So I actually started looking at the market up in this area here. So this was the third high that formed in this bullish staircase up. When we talk about staircase, I'm just referring to structure, staircase upwards. And I was looking to trade the anticipation of this higher high on the daily time frame. So I wanted to trade inside here, and what I had to do at the time was I had to take a look at the inner structures. So my next time frame I dropped down to is the 1 hour. So we started on the 2 month, we maneuvered to the weekly, to the daily, we waited till everything got aligned, and now I'm looking for the 1 hour to align with everything. And you'll see here we get the failure down past below the moving averages. We have a short-term consolidation here where price really just bounces up again, and is now on rising moving averages, making bullish structure upwards like this, where we can anticipate something like this to happen. Hopefully that's what we want to see, and you see we get some sort of version of that. And at this point in time, I was actually looking to drop down to my 10-minute time frame in this area here, because price at this point in time has actually already made a couple moves up. So it made the first bullish point here, comes down, makes a higher low, then makes the second bullish point up here. And I was looking to trade the validation or the delivery of this higher high. So I dropped down to my 10-minute time frame. And what we got here was we got the same sort of pattern. So we get the staircase up, we get a period of consolidation, and then price proves itself out of this consolidation like this, and then creates a pullback after proving itself through this consolidation. So it makes a pullback after coming out of this area. I'll draw another line on the bottom just so it's kind of clear. That's kind of how I view it. And we started to see that the moving averages got rejected here with a big candle. And I'm thinking, okay, if price does something like this, then this could be a trade that, I'd want to be in, right? Because these are my rules. After the 1 hour makes a higher low, like it's doing right here, my rule is I wait for the 10-minute to break down, move sideways, make a high above the consolidation and I'll buy stop this high. So that's exactly what happens. I get entered in the trade right here. And this, looking at it now, the 10-minute time frame just looked very illiquid right here for some reason. There's just like not a lot of volume at all. And for something that does good volume on the daily, this was just like a low volume day for the asset, and the market actually looks illiquid here. So this is something I actually took note of. I didn't like how the candles looked. So when I actually recorded the trade right here, I put a note. I just said 10-minute looks illiquid. This is my data sheet. That was my last trade on VIAV. And then you'll see here, it was my second loss in a row. And then this is what my equity curve looks like right now. So I reached all-time highs and now I'm sort of at a pullback here, just because this last trade, as soon as I entered, which I haven't even showed you guys, it literally takes me out in like the next 4 candles. And maybe this is something, so it took me out for a -1. And maybe this is something I can jot down for, you know, the future, because really when price is illiquid and it's already made a big bullish push, and at the end of the push, that's when I get validated into the trade, then I almost expect a pullback to happen and take me into drawdown right away. And that's exactly what happened, which, you know, resulted in a loss. Now, the thing I wanted to get at with this video is that, okay, I took a loss, but let me ask you guys something. Did I do anything wrong? Did I do anything wrong? And that's a hard question to answer, because you guys don't necessarily fully know exactly how I trade, most likely, especially if it's your first time watching me. But if the question was, did I do anything wrong? Well, what does it come down to? Did I follow my rules? If the answer is yes, then you simply did nothing wrong. Because trading is a rule following game. And if your current set of rules that govern your trading permits an entry and you took it, then good job. Because that is your job as a trader, to sit on the sidelines until rules are met. Now, if the answer is no, well, that's a problem, right? Because if your answer is no, well, you got to go down the line of, why aren't you following your rules? What about your rules aren't you following? Are you not following your rules because you're not confident in your specific subset of data that you've collected for your rules? Are your rules always changing? Are you experiencing things like you see other people hopping in trades and that makes you break your rules to hop in the same trades because you're scared you're going to miss a trade? Would you follow your rules if they were more simple? Would you follow your rules, or are you not following your rules because they seem too complex and there's too much rules and you find yourself never getting entries? See, there's a lot of things you can go down, or a long pathway to go down, when the answer is no, why aren't you following your rules? But since for this specific scenario, I did follow my rules, I actually want to show you guys proof that I followed my rules. So we're going to do a fun little exercise. So I pretty much just took the time, the past 20 or so minutes, showing you guys my rules, right? I just broke down my whole trade. I told you guys what I look for, what I expect, what we have to wait for, and then what I do once a time frame gets validated, and how I move to the next time frame, and what I wait for, and pretty much repeat on that specific time frame before I can move to the next time frame, right? It's just like a process that has to go down in line of specific things being met. And those specific things being met, I have came up with through my own individual back testing and studying of the charts, which is, you know, the goal of any trader, which you're probably in that process right now, or maybe you're not in that process right now because you're still in the process of trying to get down maybe some technical skills before you can even go to the markets with a consistent process, right? So everyone's in a different stage. But what I want to show you guys here is if I go to any trade here, let's just go to my, let's say this one right here. Let's open up the pictures for this trade. And this was a winning trade, by the way. And what I want to show you is these trades are going to look similar, but you'll notice how this one ended up in a win, while this one ended up in a loss. So you'll see on my weekly time frame, I'll just start on my weekly time frame. Price makes bullish stairs upwards, falls below the moving averages, and then reclaims the moving averages and starts trending or stair-stepping upwards. We can agree with that, right? Okay, now look at my weekly time frame of this trade. Price makes a bullish push, fails the averages, comes below the averages, moves kind of sideways, and then breaks above the averages, stair-stepping upwards. Can we say that these trades may look a little bit different in how they played out, or how maybe the trend looks, or maybe how the candles look in some specific areas, but they follow the same premise? 100%. And then if we go down to the daily time frame, looks like inside this area here on the trade that won, you'll see you have that breakdown, that consolidation plays out, and then you have the break upwards. So let's go to the trade I lost on today. What do you have? You have a move up, breaks down, tries to re-break up, and then breaks down right away. You have a sideways consolidation period, and then you have those breaks upwards. Don't these look like they're following the same premise? And then what did we do? Well, we wait for a bullish structure leg to drop down in. So on the winning example, we get a big push up, another big push up, and then in this area, we step down to the 1 hour. What does it look like? You have a push upwards. You have a consolidation period where price is just chopping around sideways, moves upwards into a bullish trend where it continues to stair step upwards and creates a high that comes down right to the moving average. So let's go to my 1 hour on the losing trade today. Makes a stair stepping pattern up, a bullish push, a bullish trend, breaks down, reclaims the MAs, makes a bullish structure high, followed by a low, and all we did was trade the anticipation of a high. But you'll see here, price failed and took me out. Okay, well, you'll see here, all I did was trade the anticipation of this high. But price actually kept me in the trade and goes on to win. Right? Whereas over here, price actually takes me out for a loss. So I did all the same actions, and on one side I get a winner, and on the other side I get a loser. Well, that's the game of trading. Trading is doing the same actions and getting the outcome of a win, break even, or loss in a random assortment. And that random assortment can look like this, where at any given period when you enter a trade, following the exact same rules, the trades could look exactly the same, like literally twins of each other, and one will win and one will lose. And what saves you in trading is the fact that it's a math-based game. And all you're looking to do is make sure that X amount of times you win, you get a return that outweighs the sum of the amount of times you lose and how much you lose. That is trading. Trading is taking the amount you win and minusing the amount you lose and ending up with a positive number over X amount of time. And in this scenario, you guys see, I've taken 26 trades, 12 were losses, 9 were break evens, and 5 were wins. But if I show you guys this equity curve here, does it look profitable? Even though I've only won 5 times, equating to 19%. This looks profitable to me. Doesn't it look profitable to you? Let me show you guys something. If you take that curve and you play it out a couple times, all I did was copy and paste the same picture beside each other. If I told you this was your equity curve, would you be happy? I would be amazed, because this is a profitable equity curve. And all I had to do was complete the same actions on repeat. And whenever I committed those actions or committed into a trade from those actions, or sorry, those rules being met, I was handed a random outcome. And since I was able to withstand the random draw of that outcome on every single trade, even though every single trade looks exactly the same, I'll open up a break even for you guys right here. I'll go through it very quick. You get the weekly, push up, push down, push up. You get the daily, push down, push up. Sorry, well, it went push up, push down, push up. A 1 hour time frame. Push up, push down, push up. We ended up here. We were trading the anticipation of that higher high being made. 10-minute time frame, push up, push down, claims the averages, makes a high we can buy stop, and we enter in the trade. And I'm guessing the trade hit my break-even line and then just took me out. But this trade too looks exactly the same as the winner and the loser as well. And that's why in trading, you don't focus on any individual outcome of one trade, because it does not matter. Because if you want to end up with something like this, the only way you make it to something like this is if you're able to handle this. Because it could be the next trade you take where you get the exact same setup, and instead of doing this, it does this. And you're floating in profit. When the market goes against you, on one hand, it does mean you're wrong. You're wrong in that given moment, but that doesn't mean your system is wrong, and that doesn't mean your system doesn't work. So that wraps up this trade. I really am glad that I got to show you guys a losing trade and how it looks exactly the same as a winning trade. And the only thing that looks different is that the random probability scale decided to hand me a loser instead of a winner or a break even. It was saving my winners and break evens for the other percentage of times that it's not a loser. Which in this case, 54% of the time, it's not a loser for me. Which this loss rate is pretty high right now. I would assume if I look at like just any recent like backtesting sheet. Well, yeah, my loss rate is almost 50%. %50 of the time I lose. And even there on this backtesting equity curve you see here, it's profitable. With all that being said, Hope you guys enjoyed the video. I will be back with a next one as always. And I'll leave it at that. Peace.